Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Thursday, January the 19th, 2017. And you're looking at a chart of gold futures. As you can see, gold is holding on above the 1200 mark, which is a very bullish sign going forward. Should be able to push into the Kumo cloud of death, get back up to around the 1250 range. That is our initial target that we're looking for right now. But it has been obeying the trading range of 1200 to 1210. So need to see what else can happen here. I want to blow this up for you so you can get an idea of exactly how this market is obeying the parameters. As you can see here, this is the bottom of the Kumo cloud, and this is exactly where price action has been taking place, which is also right below the initial trend line resistance. This is your short-term trend line resistance, and the orange line is your long-term trend line resistance. And as you can see, price has been obeying these areas. So the 1200 to 1210 range has been a true resistance level for gold prices. On the same weekly chart, you see silver has been acting the same exact way. And here we are below the Kumo cloud, so we're still in a bullish position and formation, but we're hitting against such strong resistance. It's going to take a lot to push through this. But rest assured, if we do push through this and get out of this Kumo cloud, we're off to the races, and it could be a monstrous, monstrous rally that ensues. And also a trend change from bearish to bullish. I'm pretty excited about that. Let's wait and see what happens. All right, here, taking a look now at GDX. GDX is still well inside of the Kumo cloud. Let's get into the daily side. Blow this up for you. All right, as you can see here, it's well in the Kumo cloud on the daily chart. It has come off of the highs in the last couple of trading sessions, but we're just ebbing and flowing within the cloud here. Need to get outside the cloud and get a strong close above $24 in order to put an end to the downtrend and start a new bull run. So I'm excited to see what happens with that one. Let's take a look now at GDXJ. GDXJ is in a similar position. The only difference is that this one it fell outside of the Kumo cloud at the to the bottom, but it's bouncing off the trend line, so it's looking weaker than what the GDX would. I'm sorry, it's looking weaker than GDX if you look at GDXJ. So if we flip the script and go to JNUG now, that chart explains why JNUG is even more pronounced below the Kumo cloud and why it's sitting here at its secondary support level. So major support level right now, $6.92. We don't want to see a close below that on Friday, or this run could be in trouble as it could fall off the cliff. What I'm hoping is this support will hold and it can help push prices up to the $10 mark. At least in doing that, that could serve as a catalyst to trigger other algorithmic processes to help push this out of the cloud and get a nice strong close around the $14 mark. That puts an end to the bear market and starts a new bull market as we run up higher. So that's what we're waiting for in these markets. Moving on, let's take a look at Pretty Ricky. All right, looking at Pretty Ricky, as you can see, moving along with the GDXJ just like it should. All right, but it's in the Kumo cloud and it's above both trend line support, so it has stronger support for it going forward. Need to get a nice strong close above $8. That will serve as the catalyst. Algos should turn on and help push this out of the cloud and get to the $9 mark. All right, let's take a look at AG. AG got hit a little bit, and you can see here we came up here and came down. So again, though, formation is following suit. with the GDXJ, just like it should, above both trend line supports. This one doesn't need as much work, believe it or not, to get to the $10 mark, which is a psychological resistance barrier, and a close above that will set the stage for this to run up to 15 at least. All right, let's take a look at another one, CCJ. After running up the way it did, CCJ has pulled back. You have a gap here that needs to be dealt with here on the daily chart. Market did manage to come back, roaring off support, but it still needs to get back up here. I think that a close above the $13 level is a strong psychological resistance for this particular share, these shares, and then that'll help push it to the $14 and $15 level from here. This one could really run and get away from you on the upside. Really not concerned to the downside because we have these support mechanisms here and a ramp, and outside of the top side of this cloud. So moving forward, let's take a look at which one do I want to take a look at now. Been it tomorrow's Friday. I don't see a lot of things happening anyway. Okay, I know. Let's take a look at this one. All right, the dry ships. I know that there's a reverse split coming in this one, so unsure where they're going to put the prices at on this one. It's this chart is so jacked up, so it could be repriced $8, $10, who knows? But it's going to be repriced tomorrow, so we'll see what happens with that one. Let's see. There's another one. Let's see. Let's look at URA. All right, on URA, same thing that happened in the CCJ, pretty much. You got a gap and then you got a bounce. So CCJ is running with URA. All right, so there you have it on that one. So pretty much the same technical outlook, just different prices. We're looking at the $17 share price for this one and the upside resistance, psychological resistance on that one. All right, let's look at another one. All right, looking at NAC. NAC has now officially filled. We that gap we had, and now we filled. So the gap and fill process is done. This one's ready to rock. You see it close up near the highs of the session as well. This one's ready to rock. I think the $2.50 range is going to be a major support going forward. So $3, here we come now on the NAC. Nice strong supports too along the way. $2.11 is the current support for this move. All right, let's look at TGB. And by the way, I think these are going to be ready to take off next week. All of these shares. All right, same thing here. TGB. Here we go. It's ready to rock. I think that the $1.25 is going to be the new support as we start to run the 140, 160, get up to the $2 mark. So this one has a lot of bullish momentum built into it. And I think this one's ready to rock as well. Let's see here. $1.04 is going to be the major support on this one. Going forward, you don't want to see a close below $1.04 tomorrow. And let's see what else I got here. Oh, okay. All right, URRE. Let's see here. All right, URRE, we had that gap on the way down here, and that gap has not been contended with, so I think we're going to best the $3 mark, at least fill that gap. If it's going to be a failed run here, then it will be, but it's going to get up to at least 3 first. But I think that there's some built-up energy in this thing. I think this is building a support around this $2 level, and I think he wants to head up to $4 or $5 a share. So this one, I got my eyes on this one. The whole uranium space right now, for the most part, is on fire and needs to be dealt with and watched. Let's see what else we got. All right, looking at the weekly time frame, you can see there's a wide $4 cloud coming. But if this thing can break into this Kumo cloud, it stands a really good chance of being able to actually feel this just come right, shoot right out of here like a rocket and get to $10. So I'm excited about that prospect. So I'm going to be looking at this one also very closely coming next week, and I'm very interested to see how this is going to close out the week on tomorrow. All right, looking at the crude oil space, you can see we're still hanging up here in these lofty levels around the $52 handle. It looks like $52 is going to be a nice momentum level for this move. The $50 price is going to be the new strong support around this level here, so about $50. And let's see what this translates for us on the paper side. Let's look at ticker symbol DIG. And you can see DIG is coming off a little bit more. It's not, elongated consolidation. You've had 1, 2, 3, 4, 5, 6 weeks. This is the sixth down week in a row after 1, 2, 3, 4, 5 up weeks, followed by a continuation failure. So it's kind of just doing this move in the reverse, but it's not coming straight down like this went straight up. So it's kind of retracing this move here. It's just taking a while to do it. And then you got trend line support here. So I say this one's probably ready to try to run again and bounce back up to 47.5. Support right now, the strongest support is the 38.68. So as long as you don't get any closes below that, then you should be fine. All right. You need 3 closes below that in order to say the bull runs over and you're going to drop below the Kumo cloud. Back here, you almost came close to it. You had 1, 2 down weeks in a row, but then you managed to reverse that on the third week. So as long as that is the continued mechanism going forward, I think it's a good call for oil prices to head higher. And believe it or not, let's take a look at the Dow. You can see here the Dow on the weekly chart is really hanging out up these levels too. It's just elongated here. It's just dragging out this consolidation outside of the Kumo cloud of death. And we have no direction. It's still bullish in its complexion. Now let's see if we can find anything different on the paper side of things. Let's see. Is there a way to get long the paper on the Dow? Well, it's the exact same type of a reflection. So let's take a look at the inverse. Sometimes you can get a better picture looking at the inverse. Let's see. And really, no, it's forming a base here on the inverse. Doesn't mean the floor can't drop out, but usually when you have an elongated situation like this, that's not the case. Let's look at the daily. Maybe the weekly is just... No, the daily is even worse. This is a very long, drawn out situation. Now, see, you did it here, but it was like slow, and then you hit lower. But this one's just elongating outwards and arching up. So we could see a pullback in the market, in the stock market. Just looking at the ETFs, the inverse, as clues. Let's look at the NASDAQ 100. Let's see if that one holds any clues. Okay, this one holds none. This one says that this one could even go lower here. So no clue in the NASDAQ 100. Let's see about the let's see here. Let's just look at the SPY on this one. Yeah, see. And it has a ramp coming up too on that one. So, let's look at the cubes. Yeah, ramp coming up. Okay, ain't no pullback in the stock market coming yet. All right, so anyway, that's all I got. Come on over to the pulsewavetrading.com. Learn how to trade these markets. Learn how to capitalize on what the central banks do and don't do. Learn how to provide an income for you and your family and hedge your physical holdings of gold and silver. postwavetrading.com. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Bang. These areas. So the 1200 to 1210 range has been a true resistance level for gold prices. On the same weekly chart, you see silver has been acting the same exact way. And here is the bottom of the Kumo cloud, and this is exactly where price action has been taking place, which is also right below the initial trend line resistance. This is your short-term trend line resistance, and the orange line is your long-term trend line resistance. And as you can see, price has been open. Thank you for tuning in to another edition of the Vulcan Report. This end-of-day report is for trading on Thursday, January the 19th, 2017. And you're looking at a chart of gold futures. As you can see, gold is holding on of 1200 to 1210. So need to see what else can happen here. I want to blow this up for you so you can get an idea of exactly how this market is obeying the parameters. As you can see here, this above the 1200 mark, which is a very bullish sign going forward, should be able to push into the Kumo cloud of death, get back up to around the 1250 range. That is our initial target that we're looking for right now. But it has been obeying the trading range of